Alrighty then. Welcome back, guys. Welcome everybody to the Crypto Report. I am Crypto Kip, and today we got an FOMC meeting, guys. This could be the day where we see the Federal Chair Jerome Powell come out and have the fourth consecutive rate hike pause in a row. This is what a lot of people are anticipating to happen here today, but we're going to watch it live here. Look at the decision as it comes out. We are expecting a pause. I do think this could cause some bullish momentum in the crypto markets, so I wanted to make you guys aware of that, and then also live stream it. Let's look at some of this volatility live on stream. Nothing more fun than that, folks. These are the days where Bitcoin moves the most, the fastest, in both directions. Sometimes what we'll see is the Fed will come out and speak. Leading up to when he's speaking, it pumps. When he starts speaking, it dumps, and then afterwards, the markets digest it and we pump again. Sometimes you see a variety of ways that this can pan out, but one thing I can tell you is for certain, we're going to see some volatility today. In fact, we're already seeing it. Some other stories on the day. I'm going to talk about some other countries and their crypto adoption. Germany now with $2 billion worth of Bitcoin gotten in a way that maybe you wouldn't have expected. I'm going to talk about that. And the Jupiter airdrop. A lot of people are getting $2,000, $3,000, $4,000 worth of Jupiter tokens for free through the Phantom wallet today and claiming those airdrops. My partner on the channel, Black claimed his, took some profit. We'll talk about how much money he made so far and what the details are on that, because it's pretty exciting to see some free airdrops going on. And I'll talk through what me and him have discussed on what we expect to see with that. No doubt Solana is a key player in this market moving forward, but we're going to talk about a lot of key players. So welcome back, everybody. Buckle up. Happy FOMC day. Hopefully we get a beautiful pump today, the last day of January, and January is green. Now, the daily candle is going to be very interesting to watch here, because if we get volatility below to the low end, we could see January turn red here. Right now, January is green. So we're going to track all of this. Now, the FOMC meeting is coming up soon. I see a lot of folks joining us in the chat. Welcome, everybody. BSS, Sir, John. Good morning, folks, friends, comrades. Good afternoon. Whatever it might be. I got 26 cups of coffee in my bloodstream right now, so you're getting an energized Kip today, let me tell you guys. So buckle up. Bitcoin at the time of this live stream right now, right meow, we're seeing a $43,500 BTC. I'm going to go over to some price charts really quick, actually. Let's look at what Bitcoin has done so far to start the day. Okay, so I'm going to go down. Sure, we got some 15-minute candles over here. Let's do it that way. We'll start with the price action for BTC. So as you can see, we're moving up. Here in the 15 minutes, let's go down to, let's say, the 4-hourly candles, and we can kind of see the trend over the last 8 hours or so. Let's see what we got here. So Bitcoin over the last, there's 2 green candles there. That is in the last 8 hours. We got an hour left in this candle. So in about the last 7 hours or so, we have had upward momentum. The very, the wee hours of last night and kind of leading into today, we had a little bit of a sell-off after a nice little pump, but we are still trying to climb. Now, a lot of people are placing bets right now. If you are leverage trading this, you are entering at a very dangerous, potentially extremely profitable time. That's why they say more risk, more reward. That is certainly true. If I was leverage trading this moment, I would be using very low leverage myself and be ready for anything. Bitcoin can move $2,000 to $5,000 in 30 seconds if Federal Chair Jerome Powell says something crazy, which is why it's so exciting to do these live streams. It's a lot of fun to be watching these 30 seconds. Who knows? Maybe it's an hour, maybe it's a week. Let's see how this thing plays out, but we're going to watch this together live. Ethereum's trying to make its moves up today as well. The overall market cap over the last month, still green. Still green. Last 30 minutes or so, we've seen a couple little red candles here. Maybe the overall market. Some altcoins are getting a little spooked right now, potentially, but Bitcoin is still doing all right. Bitcoin's still moving up. Let's go down to the hourly candles here and peek at Bitcoin. So first hourly candle here we've had in the last 8 hours or so. We're getting close, guys. We're getting very close. How close are we getting? Well, let me go ahead and show you guys this right here. So I'm going to be pulling up this live stream from CNBC, and we're going to watch it live, give you guys my kind of feedback on what we're seeing live. 1:30 p.m. My time right now, it is 12:47. So we got about 42 minutes where we're going to talk through some news and talk through some things before we kind of get this thing going. Killing it all morning, man. Good. You're making some good trades. Waldo, good to see you. Mitch Cloutier. Good to see you guys. We got 21 viewers so far, 7 likes. I think we're going to get quite a big audience today because a lot of people are anticipating this move from Federal Chair Jerome Powell. And this is the first time that we've streamed it here. So I'm very excited to be doing that with you guys. Let's see what we got here. So some of the speculation surrounding this. 20 minutes ago, a little update from CNBC. Let's read through some of this, guys, and kind of see what's on the menu right now. Markets should have tamer expectations for rate cuts. BlackRock's key member says strong economic data and resilient labor market will allow the Federal Reserve to proceed with caution on rate cuts. So what a lot of people are waiting for is the pivot. There's a word here that everybody uses when it comes to these rate cuts called rate cuts are a pivot. When the Fed changes the strategy and pivots from rate hikes and then does pauses, the pivot is when they go down to rate cuts. A lot of people, right now it's about a 50-50 shot for March, according to the CME tool, which we track quite a bit here. If you look at the CME tool, we can see what the numbers are telling us right now. As you can see today, there's a 93.8% chance that we are going to remain at current levels, which means they are going to pause the rates likely. A 93.8% chance that they are going to pause the rates today, which means we're not pivoting yet. Pivoting is very bullish, in my opinion. Now, in March, when the next FOMC meeting comes, March 20th, actually, wow, these numbers changed just a little bit. Again, our current numbers are 525 to 50. There's a 43% chance, according to speculators here, and the CME tool, that they are going to pause the rate hikes, pause the rates in March, but now there's a 54% chance that they're going to lower it by 0.25%, which could be pretty darn good. So we'll see how this plays out, guys. At 2.3% that they go 0.5%, that would be pretty spectacular, guys. That would be, but there's a 0% chance now, they're saying for March, that they're going to raise it, which means the battle against inflation is going in the right direction. If you look down the route here, you're going to see that the odds go up of this pivot coming. So people are looking for a pivot in a presidential election year, and you can see there's a lot more bets that are kind of being placed here on where we're going to end up going. But inflation's going in the right direction. We're going to be eager to hear some of Jerome Powell's comments here later today, but we're going to talk through some of this. So, BlackRock thinks that they're going to see 4 rate cuts this year. Well, the market is pricing for nearly 6. So does that mean that we're going to kind of get an underwhelming response here with the market? We'll see. Market rallied after surprising dovish December FOMC meeting, but stronger than expected growth data since then creates little urgency for the Fed to begin cutting in March. So BlackRock is a little less bullish on the cuts in March, contrary to what this CME tool is telling us. These are the probabilities that we're getting from the CME Fed Watch tool versus BlackRock thinks, BlackRock is basically saying, we're in this camp. We think that maybe it's going to be another pause. It's a little too early maybe, but again, these are just speculations. And don't think for a second, guys, that large asset managers, you think BlackRock's your friend because they're buying Bitcoin? No. BlackRock is not your friend, guys. That is a whale playing whale games, and part of the whale games are manipulating the media and the talking points, okay? So we take it all with a grain of salt. That's what we do here on this channel. We listen to this position, we listen to that position, we listen to a position we agree with, disagree with, and then we kind of can expect that we have a decent understanding of something here. So interesting to see that BlackRock believes that maybe in March we're still not going to get a pivot. But here's another quote here. While we expect Fed Chair Powell to push back on expectations for a March cut, we expect the Fed could use this week's meeting to advance plans to end quantitative tightening, as the Fed appears to be considering tapering its balance sheet runoff. So we are looking for a move in the right direction, but there's speculation as to exactly when this pivot comes. But yeah, here's another great one, and something I totally agree with. Wednesday's main event, that's tomorrow is actually going to be, wait. Today's Wednesday. Good. Okay, now I thought I had the wrong day there. But today, the main event is going to be when he actually speaks. We're going to be live streaming this live. I'm going to share this video with you guys. We'll listen to it, and then we'll kind of do a Q&A afterwards. And guys, I'm not a financial advisor. I'm just a regular fella that watches these things like you, and I assess it. I have a lot of experience in the crypto market since 2016. But we've been tracking these FOMC meetings since really inflation has been a part of the conversation. Since we've been feeling it at the gas pump, I've been like a hawk on these FOMC meetings, and I can tell you it's going to be an exciting day. Whether the price goes up or down, we're going to have some extreme volatility today. Wednesday's main event will be when Fed Chair Jerome Powell comes out and says what they discussed in the meeting. Federal Chair Jerome Powell and the Board of Governors in this FOMC meeting, we're going to hear what they have to say. Now, we're not going to actually get to see the specifics, the Fed minutes. It's so annoying that these Fed minutes, like the actual context, the literal quotes of what the Fed talks about in this meeting, we're not going to get those until a week or two after this event. But we're going to let Fed Chair Jerome Powell come out and say what their decision is, and he's going to take some questions, but we're not going to get the specific comments that were made. Just a little bit of an insight as to what Fed Chair Jerome Powell wants to portray to the market. So he plays a little bit of a political game, a good kind of balance, be active, not trying to sway the markets one way or another, trying to not let people think that he's too dovish or too bearish, too dovish or too hawkish. He kind of likes to play in the middle, and you're going to kind of see that with some of the boring remarks that he makes. But there's little key words that are very, very important. But this is what everybody's waiting. And so this individual, Darla Mercado, is saying this time the real star of the show will be the central bank's post-meeting statement, which investors will pore over for clues in the next direction for rate policy. Again, everybody's waiting to see what's happening today. We are going to see something crazy in terms of volatility today, no doubt, one way or another. I think it could go up. But, Fed Chair Jerome Powell comes out and says something out of the blue. It's a little too hawkish. That can change in the snap of a finger. Also, speculators are focused on a key phrase and whether policymakers drop it, specifically in determining the extent of any additional policy firming that may be appropriate to return to 2% over time. If the Fed leaves that clause in text, it will suggest that the policymakers are grappling with uncertainty. However, if they drop it this time, it could signal a path forward for potential rate cuts. So we don't want to hear this. Determining the extent of any additional policy firming that there may be appropriate to return to inflation of 2%. In other words, hints of more rate hikes. We don't want to see that. We don't want to see all of a sudden a shock to the market and then these odds change. If these odds change, you're probably going to see the markets get a little spooked, likely. Okay, so if they come out and they're a little too hawkish, which means basically if we see Fed Chair come out and say, determining the extent of any additional policy firming that may be appropriate to return to 2% over time, means we might do some more rate hikes, y'all. Could cause some spooks to market. So something you don't want to see if you want your Bitcoin bags to go up. We'll come back to some of the Fed stuff. We got 37 viewers, 13 likes. If you guys are just joining us, new to the channel for the first time, guys, welcome to the Crypto Report. I'm Crypto Kip. I got a partner on this channel, Black Sea. You get two different opinions from us. Sometimes those overlap. We're doing 5 videos a day for you guys. 2 of those are shorts. If you enjoy the shorts, let me know in the comments down below. I have a lot of fun doing those for you guys. I'm starting to enjoy those a lot more. But we do live streams every Monday through Friday for you, 1 a day, Monday through Friday. And we do have members on this channel. If you want to become a member on this channel, you can do so by clicking in the link in the description down below or going to our YouTube page. And what do you get? Access to our private Discord, some alpha that Black Sea and I are doing. I'll give you a little hint as to one of the recent moves Black Sea did here in a little bit. Also, if you want to trade some of the volatility today, because there's going to be a lot of it, you can use FEMEX, free money when you sign up for FEMEX and you deposit some money in there in our description down below. So check it out. Another story for the day I want to share with you guys. German authorities seize $2 billion worth of Bitcoin. Now, this is very interesting to me, okay? Think about it, guys. We recently saw this article and this little post from Bitcoin Magazine. Just in, this was yesterday. It's not just in, so this is old. They have more Bitcoin than this now. This was yesterday at 11:07, almost 24 hours ago. BlackRock had $4.6 billion. Oh, BlackRock and Fidelity had $4.6 billion worth of Bitcoin. That's 107,000 Bitcoin. And so in other words, we know now that the German government has approximately 50,000 Bitcoin. Now, the U.S. government came out today. Of course, Crypto Keeper says, thanks for doing the news. Of course, I love it. I'm so happy that I have the ability to do this live stream for you guys today. I had a pitch earlier this morning for insurance. I'm working double duty for you guys every single day. So appreciate that. But the question I have with this $2 billion that German authorities now have is what are they going to do with it? Are they going to sell it? Are they going to hold it? Well, we do know that the U.S. government just sold some Silk Road or Black Road or whatever. They just sold some of their Bitcoin, allegedly. I think that the U.S. government owns a lot more Bitcoin than they let on. We do know that a lot of it has been seized. And we see this time and time again. Now, this one came from, this is the most extensive seizure of Bitcoins by law enforcement in the Federal Republic of Germany. Here's the story. A German programmer who is accused of running an illegal movie streaming site more than a decade ago transferred $2.17 billion worth of Bitcoin to the authorities to repay at least some of the money he had made illegally, the police said on Tuesday. The transfer required the man to use his unique Bitcoin credentials to hand over the funds. So easy to just transfer $2.17 billion in Bitcoin, the beauty of Bitcoin. The man getting held accountable. This is the most extensive seizure in Germany that we've seen. This is a 40-year-old man. Man, that's a tough thing, man. That's really tough. Could you imagine having to hand over $2.something billion of your Bitcoin? And I'll tell you guys, if I'm thinking the right way on this, I bet you German authorities hold on to this Bitcoin. I bet you they just hold it. They might sell some of it like the U.S., but I think we're going to increasingly over time continue to see these big entities, countries, banks, asset managers holding on to these Bitcoin and accumulating them like crazy. I mean, in just 3 weeks' time, guys, BlackRock accumulated $4.6 billion with Fidelity in Bitcoin through these ETFs. That is a lot. They're already probably in the top. They're definitely in the top 15 of holders for Bitcoin, but they're probably going to be in the top 3. Who knows? I mean, could these guys flip Satoshi? I don't even Satoshi. Could they flip them? I don't know. We're going to see how this plays out. Certainly coming out of the gate swinging makes me so bullish on Bitcoin. It's just so bullish on Bitcoin. And, you know, altcoins too. When Bitcoin gets pumped, it flows into altcoins, guys. That's why we have this channel. We believe we're going to make a lot of money here on this channel. I'm not a financial advisor. We don't do financial advice, but if you're here and you're watching, we're speculating, guys. We're speculating every single day on this altcoin, that altcoin, whether it's meme coins, whether it's layer 1 solutions, layer 2 solutions, building on Ethereum, building on Bitcoin, building on Solana, building on Cronos. I'm going to take you guys through all of it because there's a lot of things, a lot of moving pieces to this market. One of the biggest things going on right now, everybody's excited about Solana today. It's absolutely incredible. I'm getting a dry mouth here. I gotta drink some water, take a breath. Can you guys tell, by the way, that I had like 27,000 cups of coffee today? Because I had a lot of coffee today, folks. I had a lot of coffee. But this is the big story for the day. Free money. Everybody's getting free money today. Well, not everybody, but anybody who used the Jupiter exchange in sometime in November of 2023. I think it was early November. If you were using Jupiter exchange before November of 2023, then you are eligible to claim some free Jupiter tokens. A lot of people are getting 3,000, 4,000 Jupiter tokens. It looks like 3,200 is the magic number. Speaking of which, my partner on the channel claimed his 3,200 Jupiter tokens. Jupiter, if you don't already know, you should know this, guys. If you don't know this, well, then you got to watch more content. You better subscribe to the channel. You better smash the like button, too. That's the number one thing. If you guys didn't know it already, the number one thing you can do to support any YouTube channel, like a channel, say, that's going to do a nice live stream for you guys of the FOMC meeting and 5 videos a day for you, the number one thing you can do to support a channel is smash the like button. But I want to share this with you guys. If you don't know what the Jupiter Exchange is, it is a decentralized exchange built on Solana. It's one of the biggest exchanges out there. In fact, it actually flipped Uniswap the other day on Ethereum in terms of trading volume, I believe, over 24 hours, which is good to see. I think that was the metric I saw, but it is performing spectacularly well, and we've seen a lot of people flock to Solana in general. We've talked a lot about Bonk on this channel and how Bonk, I believe, created this meme coin frenzy. Now you got people chasing meme coins, so what do? They download Phantom. They're getting into Solana. They're buying Solana. They're using the Jupiter Exchange. Now, if you were early to this party, you might have gotten 3,200 Jupiter yourself. You got to go to your Phantom wallet. It's very straightforward to claim these guys. Now, do your own research on that, but I've seen that if you go into your Phantom wallet and you go to the browser, there's a big old option, number one, to claim the Jupiter airdrop. You got to do your own research there. Please be careful when you're trying to claim airdrops. Easy way to get scammed. All of a sudden, you grant somebody access to a transaction and they drain your wallet. Don't do that, guys. Be careful. Jupiter airdrops out there. If it's claimable for you, then claim it. If not, don't fall for any tricks out there. There's a lot of scammers. But Black Sea, my partner on this channel, a lot of you guys might be wondering if you've got this Jupiter airdrop and you got this going on, you might be wondering, well, what do I do? Do I hold this? Is this price going to go up? Do I sell it? Well, I'm not telling you one way or another what the right thing to do is, but we can see what Black Sea did today. I wasn't eligible for this. I didn't get any Jupiter tokens. I didn't start using Phantom until late November. I was just days away from using it, unfortunately. But Black Sea ended up sell the news. He sold the news. This is the airdrops here. Sell the news, expecting a sell-off. I think it's a good bet, personally, because what we see when we get a listing on an exchange, when we get a big airdrop, what you typically see is a sell-off. Think about Bonk. Bonk was airdropped to everybody, and it went up a little bit in the beginning, but then it had a massive sell-off. Well, what did Black Sea do? Black Sea, my partner, he bought that dip after the sell-off, and then it skyrocketed and made face-melting gains. Jupiter could do the same thing, so I might be buying some Jupiter tokens, but I will be waiting for a sell-off. I'm not going to go buy some Jupiter on my own today. I'm going to wait to see if a sell-off is coming. And guys, I really do believe that at some point before the Bitcoin halving, or maybe right after the Bitcoin halving, we're going to have some kind of big event where we get a sell-off in crypto. Maybe it doesn't happen, but I've come to learn that it's better to expect it and anticipate it. Not changing my trading strategy on that. Remember, my strategy is to DCA and HODL for the long term. That's what I do here on this channel. Of course, you get some free money from an airdrop. That's a different story. Taking profit for something like this is reasonable. But if you're dollar cost averaging and you're trying to build a bag for this bull market that you see coming, I just look at any dip that might come as another opportunity to buy the dip. So, you know, if a big dip comes, Jupiter will certainly come down with it, and a lot of your favorite altcoins will come down, and I'll be keeping an eye out for some of that. You know, everybody's covering this federal chair Jerome Powell thing right now. Everybody's covering this right now. But Jupiter's price is at 69 cents right now, is up to a little bit higher earlier today, all the way up to $1.27 at one point here. And so we'll see how this thing plays out, where this price action goes today. What else we got? Bitcoin here, kind of straight a little sideways to down right now, trying to decide what we're doing before this FOMC. Let's see what we got going on right now. Still no news. I've got a couple different ways that I'm trying to watch for this FOMC meeting. So let's go back over to it over here and see what we got going on. 25 minutes left, folks. 25 minutes left. If you're here, if you're waiting, if you're excited, do me a favor, guys. Crush some like buttons for me. Subscribe if you haven't done so already. If you want to join us in the chat, you do have to subscribe if you want to check it out. So just wanted to let you guys know that. Matter of fact, I'll tell you what. For this FOMC meeting, I'll make it so that if you want to participate, you don't even have to be a subscriber. There you go. Now, subscribers only mode is off for the FOMC. Merry Christmas, guys. Merry Christmas. Happy birthday. Happy birthday. Aiden says, here goes Kip. Here comes the volatility. Let's see it, guys. Anth Crow says, work, gym, crypto report, live. I love it. I love it. I want to see this Fed chair meeting. Let's see if we got any other updates from CNBC yet. Couple more updates for you guys. All right, so Federal Reserve leaves rates unchanged. There you go. Breaking news, guys. It is official. We are hearing about it live on the stream, and crush the like button if you think so. ML Ballman's asking about Orange. I'll tell you about what I think about Orange here in a second. Got to do some more looking on that. Emmy Crow says, she says howdy. Good to see you. Howdy to you. Fed Reserve just in. Breaking news, guys. Federal has officially, just like we expected here, left the interest rates unchanged in January. It is the fourth consecutive rate pause that we have seen from the central bank here. The Fed is going to get ready for this pivot here soon enough. Here I am, just like rubbing my face. Got an itchy face. Let's see what else we got going on. No, whoa, is that a Jim Cramer ad? That was crazy, man. Did you see that, guys? Jim Cramer popped up on screen. That was wild. 11 minutes ago, here we go. Markets stand before. What were we looking at before this decision just came out? S&P 500 was down a little bit. The Dow Jones Industrial Average fluctuated near flatline, up about 17 points. NASDAQ Composite was underperformer at three major averages, so it looks like kind of boring. 10-year Treasury traded at 3.96, down 9 basis points. Well, the 2-year note was down. So markets little down. Dow Jones was a little bit up. Let's see what else we got going here. Matter of fact, let's go ahead and just do some of this right here, and we'll go right over to Yahoo Finance. Let's look at what we got going on. I probably should have pulled up the S&P 500 before this, but let's see what we got going on now. So we got a rate pause. Still down. In fact, we're trading a little bit lower even. Everything's showing a little bit red. Gold's up. That's good to see. Let's see how Bitcoin's trading. See how Bitcoin's trading, y'all. Bitcoin's coming down a little bit as well. So there you go. Very, very interesting to see. So a pause is good, guys. A pause is good. So what are you seeing? Let's speculate. Let's talk this out a little bit, okay? So what is a buy the rumor, sell the news event again? Well, this is a buy the rumor, sell the news event again, folks. What do we get? We get Federal Chair Jerome Powell and the Board of Governors meeting, and they decide to what? Pause the rates totally within expectations. Leading up to this, what happened? We got a pump. Leading up to this day, we saw a nice little recovery. Bitcoin just on the 24th of January was how far? It was 13% lower, guys. So what did we get? A buy the rumor. Where's that time frame? Over the last 8 days and 3 hours, we have seen upward momentum. Majority upward momentum. 13.67% gains in the last 8 days. Now, what happens? The Fed comes out, and what do they say? They say, we're going to pause the rate hikes. This is good news. So what happens? It's good news, but the news is out. Sell the event. Sell the news. Sell the news. But it's not over yet. Because again, remember guys, the key is to watch what Fed Chair Jerome Powell says. So we are halfway through. We've got half the news cycle out. This is a little mini sell-off in anticipation for the FOMC, press conference, let's say. Fed Chair Jerome Powell's press conference. We're going to want to see some of the comments by him. Again, if he comes out and says that, we have a long way to go to get to our target rate of 2%, and we need to speculate and see if we need to raise rates more and that kind of language. If we see that, maybe we get a little more downside. If we see him get really dovish and kind of talk about how they expect to cut some rates or it's looking good or they just don't even mention rate hikes at all, then you can start feeling a little bit bullish here. So we don't know which way it's going to go. We can't possibly anticipate what Fed Chair Jerome Powell is going to say. We do not know yet what was discussed in that room. We can see that inflation's heading in the right direction, but we still don't know what's going to happen what just happened in that room. But we're going to find out. We're going to have a little press conference here soon. Brandon in the chat says, I'm going to have $1,000 margin trade at 100x loaded for volatile action, baby. Don't follow me. Oh my goodness. A large leverage trade from Brandon in the chat. John316 is loving it. John316 saying, I want to buy 1,000 BTC right now. Let's do it. Buy $1,000 worth of BTC. Look, we could dump here. We could pump. One way or another, we're getting volatility. All right. We've had a nice move over the last 8 days. So some people are thinking, like Jim Cramer thinks, that we're not going to hold at these levels. I just think anything's on the table with Bitcoin. At some point, again, I'm not going to be surprised if we see this 50% sell-off here in crypto. But that's crypto, baby. That's crypto. Aiden says, Brandon, just throw $1,000 in a fire. I'll tell you, Aiden, that's not necessarily what it is. Brandon makes a lot of money on his trade, and he's a good trader. There is a possibility to become a good trader. Majority of traders lose, but you can be a good trader. You can be a good trader out there. And so, if you want to learn, FOMC is pretty easy to use. It is very risky. And for some people, if you got a gambling problem, then you might as well just set $1,000 on fire. But for some people, you can turn $1,000 into $100,000 and that $100,000 into a couple million. But it's not going to happen overnight. And the people that think it's going to happen overnight are probably going to lose. Aha! Brandon's good. Brandon's good. This guy's in our chat. Crushing trades every day. I've been DMing Brandon a little bit, talking with him. He's a killer. He's doing a good job. Keep up the great work, brother. But trading is not for everybody. Trading is not for everybody. These are volatile moves. Like, let's just pretend, you saw this, and here, this is what a lot of traders will do. You'll be like, okay, so, Bitcoin moving up. Okay, let's see. Bitcoin's moved up 13%. We're getting a break back out. We're going to go back up to $49,000. A lot of people are talking about a 50K Bitcoin. Could we see a 50K Bitcoin in the next couple of days? Maybe. Maybe if the Fed comes out and says the right words, maybe we could see that. January's already green. Maybe February turns green as well. And maybe we have a red March. Maybe we got a green January, February, March, April, and then we got a really bearish May and June, and then all of a sudden we're off to the races and explode. Who knows? But what a lot of people do, it seems, when it comes to trading is, and this is what the old me would have done, 4 years ago, 5 years ago, I would have saw this and would have been, oh, Bitcoin, FOMC meeting. Oh, Fed paused the rate hikes. So we're about to break out right here. We're going to break through these wicks. Okay, we're going to break through these wicks. I'm going to long it right here. And then what would happen to you? You just, say you use 50x leverage and Bitcoin goes down 7% or, 0.7%, you're liquidated. You're gone. You're done. You're dead in the water. It can happen in the snap of a finger, guys. So it could be a tool to make your money quick. It could be a tool to lose your money quick. But what you really got to get good at is, buying low and selling high, right? We pumped through this channel. We're coming back down to it. Don't be surprised to see if Bitcoin touches down to 43.2 before all of a sudden we get this press conference. And we've got some time left. We've still got, what do we got here? Let's see what we got here. You know what? Is this live right now? Let's see. We might actually have it live now. Not yet. 16 minutes left, guys. 16 minutes left. Actually, switch over to this. You know what? Let me unshare the screen real quick. Don't want to show you guys that. All right, beautiful. So now we're ready to go. Okay, so now I've got it ready to go. We've got, 16 minutes left before this live stream starts, so we'll keep an eye for that. We will keep an eye on that. So Fed holds rates steady, tempers expectations on cuts. Very, very interesting to see. Let's see what this article's about here. So here's the statement. So what happens is he releases this statement, and then after the statement, he comes out and he gives a little press conference. So here's the official statement. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. That is the official statement. I don't know how they're tempering expectations on rate cuts per se. It's interesting language being used there. There you go with the media. Fed officials noted that the risks to achieving price stability and maintaining full employment are moving into better balance. That's pretty good to hear. The Fed characteristics job gains as having moderated over the last year, but note job remains strong. The central bank also changed language from the prior statements that previously left the room for rate hikes. On Wednesday, the Fed more broadly referred to that's just now today, referred to any adjustments it may need to make its interest rate policy in the future. The Fed had in prior statements made reference to potential need for any additional policy firming. So again, this is more dovish language. We're probably going to see something pretty decent here, but why is the market dumping? Little sell the news event, guys. That's all that's going on right here. In a nod to stronger than expected fourth quarter GDP, officials characterized the economy as expanding at a solid pace. Still, they noted that the economic outlook is uncertain. So we're still not 100% out of the woods for this potential recession that we hear so much about and inflation. So, again, this Fed chair guy, Jerome Powell, he does not want to get overhyped here. He does not want to get you too excited, too bullish. Doesn't want to be too dovish, doesn't want to be too hawkish, but he's certainly leaning dovish, which is very, very interesting. Emmy Crow says, did the Corgi AI mint today? Very good. Yeah, the Corgi AI NFTs coming out. I might pick one of those up on the aftermarket. We'll see. I'm a Corgi AI fan. I don't hold any Corgi AI right now, but I think it's going to have some nice pumps, y'all. I think it's going to have some nice pumps. Got a lot of people trying to do some trades in the chat. Yeah, Brandon's doing a good job from what he says. He's looking pretty good. But got some folks out there DCAing. Let's see here. Who said that they're DCAing? Somebody just said they're DCAing here recently. DCAing into a few more. So Brandon is doing both. He's a trader and he's DCAing. That is the name of the game, guys. It's good to have a couple different portfolios. A couple different portfolios to get exposure to a couple different things here when it comes to crypto. I wanted to share this with you guys as well. So let's go back to CNBC. I want to go back to the Fed meeting updates. I want to see if we got any other updates, some more quotes from some of these big folks out there in the space. Let's see what we got here. Federal Reserve signals it's not yet prepared to reduce rate cuts. Central bank policymakers said that they aren't ready to start cutting rates. Very interesting. The committee does not expect it'll be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. That doesn't mean that by March they're not going to be ready. So you gotta kind of not get all, you can't react to some of these quotes. Some of these will spook you a little bit if you don't really think about them. Doesn't really say one way or another. The committee does not expect it'll be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. Again, they play both sides of the event, but this chilled investors and stocks slip slightly. But let's see what Fed Chair Jerome Powell comes out. So maybe, could potentially be bearish. People are getting a little spooked, but again, could be a little bit of a sell the news event. We'll have to see how it plays out. It's coming soon, guys. We're going to see it soon. Bitcoin, there you go. I said, we could see this thing tap down to 43.2. Here we go. Got there in a hurry. Let's see what Ethereum's doing. Turned a little bit red as well on the 4-hourly candle. Crocoin, hanging on. Solana down to $100 right now. $100 right now. Pretty good price for Solana still. We're waiting now. Now it's the waiting game, guys. Let's see what the regular market's doing as well. Let's take an eye and peek at that. Woo! I will tell you guys, I've been doing this thing. So I haven't even eaten any food today. I've had like 4 cups of coffee, no food. I just don't eat in the mornings anymore. I just have not been eating in the mornings anymore. I'll tell you. And I feel good. I got a lot of energy, as you can see. Let's see what we got here. S&P 500 down almost 1% now on the day. NASDAQ down 1.5%. Oil's down. Gold's up a little bit. Russell 2000. Dow's down now. Dow was up earlier today. Dow's down too. Let's see what happens. Fed chair could either make this thing dump more or turn it around. We'll see. Probably some more volatility coming, guys. Probably some more volatility coming. John 316 asks, Kip, did you buy the Blue Mountain coffee yet? Okay. Here. Look, I gotta do this. Benny Blue Eyes. Benny Blue Eyes has been telling me about this Blue Mountain coffee. I haven't written it down. I thought about it the other day, but here we go. Benny, I got the pen. I'm going to check out some Blue Mountain coffee. Do they got flavors? I like flavors. Me and Mrs. Crypto Kip, we like some flavored coffee. She's more of the classic coffee gal, I'll admit, but I'm a big hazelnut guy. Give me some hazelnut coffee. I'm a big fan. 43 looking weak to Brandon trading it, and he's saying we're going to break down below 43K. Let's see. Possible 700 floor coming to 42,700. We'll see. Oh, it's John. I'm sorry. Sorry, John. John, was Benny talking to me about that too, or was that you, John? That might have been you. I wrote it down. John, I'll check it out. Blessings to you, my friend. Blessings to you. Federal Reserve leaves interest rates unchanged, tempers expectations on rate cuts. Market's coming down. Let's see what we got here. I'm going to peek at the S&P 500. Now, the S&P 500 is still at all-time highs, which is so interesting. Let's see what we got here. Still at all-time highs, I believe. I'm going to go back out to the year here. We'll see. 5 years? Yes, we are still at all-time highs right now. So don't be surprised, we're in price discovery mode for the S&P 500. So we can have some little moves of volatility with this thing. Election years are typically pretty bullish. We've looked at some of the data on it. We'll just have to see how it plays out. Again, waiting on Fed to go live. Let's see where we at. 8 minutes left, guys. We are getting closer. 8 minutes left until the Fed Chair Jerome Powell comes out and speaks. And we're going to do it live. We'll do it live. We're going to do it live. All right? So crush some like buttons, guys. We're just waiting now. Now we're hanging out. Do a little Q&A. What are you guys looking at? What are your favorite coins on the day? How we feeling, folks? How we feeling? 8 minutes left. I'll tell you what I'm going to do. I got a little hourglass back here. It's a 15-minute hourglass. I'm just going to put it there so I can keep track of where we're at. Once it gets about halfway, I'll know. We're waiting on the Fed at that point. Let's see what we got here. I'm going to go over for you guys. Let's see what we got for Jupiter right now. How's Jupiter doing? Jupiter's still doing okay. Still doing okay. Down a little bit. 69 cents. 2-3 grand. Not too bad. Not too bad for an airdrop, guys. Not too bad for an airdrop. Did you guys get the Jupiter airdrop? Let me know in the comments down below. Brian bought some this morning after the 50% discount. Where'd you buy it, Brian? What price did you get into Jupiter at? Good to see you out there. I'll be buying some eventually. I'm going to wait a little bit longer, though. Let's look at some of the big movers on the day while we're sitting tight. We got some time, guys. So throw some questions in there as we're going to watch this thing live. I'm going to do some comments as we kind of hear from the Fed live in this press conference. It's going to be a little bit of a longer stream today, folks. Ron Wilson got his Jupiter airdrop, qualified for 5,000 Jupe. Woo, baby. That's a nice, 3-4 grand, something like that? Pretty good for you. Pretty good. Not too shabby. Let's see what we got going on here in the last 7 days. Bitcoin's up 8% still, even though we're slipping a little bit today. Conflux doing well. Sats has been doing pretty well. Let's see what's moving today, though. So interesting. Altcoins really were bleeding this morning. We were looking at the overall market cap, which was red, while Bitcoin was green, which meant altcoins were selling off. Bitcoin dominance. Oh my goodness. I didn't even see it, but Black Sea did a video on this morning. I was wondering what his title was about. I didn't get a chance to watch his video yet, but yeah, Bitcoin dominance shot up. This is exactly what Black Sea was talking about. He was saying dominance is going to shoot up. I agree. Before this halving, we see Bitcoin dominance take a stronghold, and we're seeing that right now. 54.4% out of nowhere. Just a altcoin reckoning now. I mean, Bitcoin's going up. Altcoins are slow. Nice move from the lows recently, but Bitcoin dominance is up. 24-hour movers. Some frequent flyers over here. Chainlink, a lot of Chainlink bulls. But look at this. There's only, on the 24 hours out of the top 100 tokens, there's only 12 of them that are green. Everything else is red. That's why you got Bitcoin dominance up, guys. When Bitcoin holds steady, which it's pretty darn steady, guys. I mean, it's up, it was up today. It's only down 0.47%. Altcoins are down. Ethereum's down 2%. Solana's down 4.6%. Cardano's down 1.1%. Avalanche is down almost 4%. No surprise there. Let's look where Cronos is at. Cronos is down 4%, This is where we're at, guys. This is where we're at. Brian's buying more Crow. Love to see it. I love Crow. I think it's going to do well. We'll see how it plays out. Phantom at 50 cents. Is that when you got it? Is that when you got the Jupiter tokens? Very good. So you're up. And I'm Turner 1983 asks, if you had a spare $2,000, what would you buy right now? Right now? Well, first, what I do is I'd go to this 24 hours and I'd look and I'd say, Jupiter's down 50%. Well, that's pretty big. But we're probably going to avoid that one for now. Too much going on, too much news going on. FTX token, definitely go all in on that. Just kidding, guys. Just kidding. Oh, my gosh. I shouldn't have even said it. I hate this coin. I hate FTT. FTX was the epitome of the disaster that was the last bear market. I will never buy an FTT token ever. So let's just scratch those two off right away. It's funny. You asked me if I had $2,000, what would I buy? Well, what I'm looking at is the biggest losers. Well, why would you look at the biggest losers? Don't you want winners? Yes. But a lot of these biggest losers are actually biggest winners. Like Pyth is only at a $611 million market cap. This could do pretty well, and it's down 8%. Now, we don't have anything that's down like crazy double digits on the last 24 hours. Manta, FTX, Jupiter. Manta was an airdrop that came out recently as well. So nothing crazy there. Probably got about 5 minutes left until the Fed comes out, so I'm aware of that. Mrs. Crypto Kip in the chat. A mini Australian Shepherd and a ping pong table. That's what Mrs. Crypto Kip wants. Well, that's what I want. Oh, she's saying, what would you do with $2,000 right now? We would get a mini Aussie and a ping pong table. Sweetheart, you don't really want an Aussie, though. You told me that. Mrs. Crypto Kip and I have been looking at dogs, but I don't think we can pull the trigger yet, and I'll tell you why down the road. I'll tell you, got some secrets coming your way, folks. You didn't hear it here, all right? And that's all I'll give you, or else I'll get in trouble from Mrs. Crypto Kip. Wink. But yeah, no, I mean, I would buy a ping pong table for sure. But in terms of crypto tokens, I go shopping for discounts. Optimism could potentially be pretty big this cycle. It's down 8%. But let's look at some bigger losers. Let's look at what's down over the last 7 days. How about that? Jupiter's obviously a big loser the last 7 days. Maker down 4%. Nothing really on a huge discount. So we had a great opportunity to buy the dip recently. So here, as I'm kind of going through this, what would I buy? Personally, guys, I don't really have a lot of exposure to Solana. I'd like some Solana. I don't have any exposure to Avalanche. I'd like some Avalanche personally. And, you know, if you look at what's going on today, they are down 3%, 4% for Avalanche, down 5% for Solana. Solana moves big when it moves. Maybe I'd wait a little bit to kind of see how this Fed thing plays out. Weird day to buy. Maybe, you know, at the bottom of this volatility could be a good buy, but probably Solana or Avalanche. And that's just because of my portfolio. But let's just pretend like I didn't have any crypto. I'd probably buy Ethereum. Maybe that surprises you guys. I'd probably buy Ethereum. If I had no crypto and I learned about crypto and I knew a lot about crypto, but I hadn't bought any crypto, I'd probably buy Ethereum because the Ethereum ETF could cause some buy the rumor hype for it. And we have a bull market coming, and Bitcoin's been outperforming Ethereum pretty spectacularly. And I think at some point, Ethereum's going to melt some faces. So maybe I'd buy some ETH if I had $2,000 right now. But I like to spread it out. I like to get some low cap altcoins and all that. Now, if you want to get really risk on, I'm really bullish on Stacks. I think Stacks is a good play. It's up on the week, but I think Stacks is a really good play. This thing was up to $2. You got a 25% discount from the recent highs, which is pretty cool to see. I've got a lot of Crow, and I'm just going to assume you got Crow too, so I'm going to zip past it. But I think Crow's going to have an easy 20x, possibly up to 100x, maybe more. We'll see how that one plays out. But if you want to get really, really risky, I'm bullish on this Alex token. So Alex is the first decentralized exchange built on Stacks for DeFi on Bitcoin, and I think that one could be pretty good. And it's down like 50% from its highs. We'll take a peek at it real quick. Oh, we got the press conference. Here we go, guys. All right. Here we go. Here we go. This is what we're doing it for, guys. This is the moment. Forget the prices. We got Fed Chair Jerome. Hey, Jerome Powell. Let's do it. Usually it takes him a while to come out. Let's see if he can get out here sooner rather than later. We got 40 viewers, 24 likes, guys. If you want to support the channel, crush the like button. That's the number one thing you can do. If you want to become a member on the channel, like Emmy, like John, get that name in green, and get access to our private Discord. Check it out, guys. We have that for you on the homepage of our YouTube channel. Let's do it, guys. There you go. Waldo, congratulations, brother. Glad you became a member. Welcome, welcome, welcome. Good to see you, man. Glad you could join us. Get in that Discord. Let's chat. We got new members coming every single day, guys. Sometimes if you're hanging out in our live streams on these chats, you get a free membership. You get a free membership. If somebody's generous enough to gift it to you, it could be coming. DeFi Degen says, let's go Hawking. He's an Alex bull as well. I love it. Grok. Some Grok bulls in the chat. Doge 1 satellite mission. 9B46. I think that Dogecoin's going to $1. Did you guys like that Dogecoin video, by the way? I think Dogecoin could hit $1. Anything above $1, I'd be shocked. Anything above $1, I'd be shocked. But I think Doge is going to go to $1. Here he is. All right, let's do it.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured. and the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome, but we will need to see continuing evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. we know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
A bit of promise in there. Let's see.
Gina Smilek from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are, in fact, on a path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry, if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition. But we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick Timmeros of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
How come you didn't cut the rate yet, Powell?
As you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2% so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or its variants. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance? Well,
I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book and they're in all the materials that we look at. But I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so. In theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all because, for one thing, we don't know.
Really
we look
quick,
at more
guys,
than just the Fed funds rate.
If you can tell, if you've watched the other FOMCs,
but
just
in addition,
look at his body
we don't
language.
know with great confidence where the neutral rate of interest is at any given time.
Nervous, right?
But that also doesn't mean that we wait
itself
around
is
for to see the economy turn down because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Howard.
Hi, thanks, Chair Powell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates? Yes.
So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case,
I don't want Americans to lose their jobs, but if they do, that'd be great.
If we saw an unexpected weakening certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things would argue for moving later. In the base case, though, where the economy is healthy and we have we have ongoing growth, solid growth. We have a strong labor market. We have inflation coming down. That's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank you.
We're not really at that stage. There was no proposal to cut rates. Some people did talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later. So, we're not at a place of really working out those kinds of details because we weren't actively considering moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. And to me, that's a well-functioning public institution.
I'm good at my job, says Fed Chair Jerome
Hi,
Powell.
Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that.
Including?
Rent costs.
Yeah. Well, so we're not, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rents. So, of course, we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation. So the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming. And we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time. But it may well have some more time to run. The supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
Thank you, Mr. Chairman. You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing, you see the effects, you do. Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles and has brought that working with tighter policy, which has enabled the supply side to recover, I think that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest-sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course, you know that it's not something you can identify with any precision. But a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate that neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is, when that peters out, I think the restriction will show up probably more sharply.
Thank you. Sorry. Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market. I think you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market, by many measures, is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way, though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens. It's probably will take a couple of years to get all the way back, and that's okay. That's okay. But we do see. You saw today's ECI reading. The evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market is, I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year, and we were kind of thinking, well, maybe we won't get it back. And then 2023 we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to where it's still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance, and that's what we want to see. And one great way to look at that is what's happening with with wage increases. And you see it now across the major things that we track. It isn't every quarter, but overall there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could reaccelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk, the risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open here and why we're not rushing. So I think both of those are risks, but I think the more likely risk is the one that I mentioned, which is you've had 6 good months, very good months, but what's really going to shake out here? When we look back, what will we see? Will inflation have dipped and then come back up? Are the last 6 months flattered by factors that are one-off factors that won't repeat themselves? We don't think so. We don't. That's not what we think. But that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching as well? And if we see those revisions fairly minor, is that going to give you more confidence where things are going?
We'll just have to see. Yeah, we'll look at those. Last year was a surprise.
Michael McKee, Bloomberg Radio and Television. If you don't want to use the term soft landing, would you say at least that from your point of view now, the other scenario of a hard landing caused by the Fed is off the table or the risks have diminished very much? And you mentioned below 2% inflation on a 3-month basis. Core PCE has been running at 1.5%. And there are those on Wall Street who think that if you maintain the level of restriction you have right now, you could end up with inflation running below your target. How do you see that?
So your first question, how to describe where we are. So I guess I would just say this. Executive summary would be that growth is solid to strong over the course of last year. The labor market, 3.7% unemployment, indicates that the labor market is strong. We've had just about 2 years now of unemployment under 4%. That hasn't happened in 50 years, so it's a good labor market. And we've seen inflation come down. We've talked about that. So we've got 6 months of good inflation data and an expectation that there's more to come. So this is a good situation. Let's be honest. This is a good economy. But what's the outlook? That's looking in the review. The outlook, we do expect growth to moderate. Of course, we have expected it for some time, and it hasn't happened. But we do expect that it will moderate as supply chain and labor market normalization runs its course. The labor market is rebalancing, as I mentioned. Job creation has slowed. The base of job growth has narrowed. And, of course, 12-month inflation is above target and getting down closer to target. Is not guaranteed, but we do seem to be getting on track for that. So those are the risks and questions we have to answer. But overall, this is a pretty good picture. It is a good picture. Your second question was, sorry.
Could you get inflation that is below target, end up with inflation below target, and you have to do something about that?
So the thing is, we're not looking for inflation to tap the 2% base once. We're looking for it to settle out over time at 2%. And the same thing is true. If we have a month or two of lower, and we have that now, of inflation that's annualized at a lower level, that wouldn't be good. We're not looking to have inflation anchor below 2%. We're looking to have it anchor at 2%. So if we do face those circumstances, then we'll have to deal with that. I think as of now, the question which we want to take advantage of this situation and finish the job on inflation while keeping the labor market strong.
Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for taking this. So as I've heard from some district Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
Good question.
So I'll point to that language on your first question. We included that language in the statement to signal clearly that with strong growth, strong labor market, inflation coming down, the committee intends to move carefully as we consider when to begin to dial back the restrictive stance that we have in place. So if you take that to the current context, we're going to be data dependent. We're going to be looking at this meeting by meeting. Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen. So I wouldn't call, when you ask me about in the near term, right, I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case. Then your second question is
is this the start of when we see a cut, is it the start of a cutting cycle, or could it just be a one-off?
That's going to depend on the data. The whole thing is this is going to depend on the data. We're going to be looking at the economic data as it affects the outlook and the balance of risks, and we're going to make our decisions based on that. And it could wind up, we'll have another SEP at the March meeting, and people will write down what they think. But in the end, it's really going to depend on how the economy evolves. We talked about there are risks that would cause us to go slower. For example, stronger inflation, more persistent inflation. There are risks that would cause us to, or if they happened, that would cause us to go faster and sooner, and that would be a weakening in the labor market, or for that matter, very, very persuasive lower inflation. Those are the kinds of things. So we're just going to be reacting to the data. That's really the only way we can do this.
Victoria. Hi, Victoria Guido with Politico. Could you talk a little bit more about productivity growth? You've mentioned multiple times about, the level of wage growth that's consistent with 2% inflation. We've obviously seen,
all right, I don't really care about
you were talking about
productivity
ECI
growth,
this
but we are
morning,
going to continue to
in which
watch
it's
this
cooled a
whole
little
thing,
bit, but still sort
watch
of
the
above
price
what
action.
you
And I'll
wanted
tell you
to
that
see.
last question,
Growth
guys,
has been very
was
strong. How much
probably
of
one
those
of the more
numbers do
bearish
you
things that I
attribute
had.
to productivity?
Just for him to come out and say that, like,
see
we're
that
not going to give you what you're
productivity
hoping
as
for in
sort of
March
just
was
temporary because
something
of
that
the
probably
factors,
made people
the
go,
labor and
oh,
supply
no.
chain factors you were talking
But
about?
we've had
or do you think
a
that,
really bullish statement in here
productivity growth
and a
fade
kind of bearish statement. I'm going to cover them, but stick with us,
this is
guys.
a really interesting
we'll go through.
question, and
let's get back
I
to
think,
Jerome Powell. I want to get the whole thing so the people tuning into this
I think if you look back to the pandemic,
and understand
you saw
every question that was asked.
A spike in productivity as workers were laid off and activity didn't decline as fast. And then you saw a deep trough of productivity. And then over the last, you saw high productivity last year in 23. I think we're basically in the throes of getting through the pandemic economy. And the question will be, what is it that has changed? The productivity tends to be based on, fundamental aspects of our economy. Is there a case, will it be the case that we come out of this more productive, more on a sustained basis? And I don't know. What would it take? It would take, people talk about AI, but my guess is that we may shake out and be back where we were, because I'm not sure I see work from home doesn't seem like it's a big productivity increaser. AI, artificial intelligence, generative may be, but probably not in the short run. Probably maybe in the longer run. So I'm not seeing why it would. But right now, I would say the productivity is kind of what falls out of the broader forces that are driving people in and out of the labor force and activity returning and supply chains getting fixed.
Right. So would that be behind why we've seen such strong growth, but we've also seen inflation fall, that maybe there's just a higher level of productivity?
That's one way to look at it, yeah.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. I want to ask a little bit more about housing. I'm wondering, how closely are you watching rent and housing prices as you evaluate whether and when to cut rates? And it seems like housing prices are not coming down as quickly as you expected?
So when we think about, our statutory goals are maximum employment and price stability, and that's what we're targeting. We're not targeting housing price inflation, the cost of housing, or any of those things. Those are very important things for people's lives, but they're not, those are not the things we're targeting. We're also well aware that when we cut rates at the beginning of the pandemic, for example, the housing industry was helped more than any other industry. And when we raise rates, the housing industry can be hurt because it's a very interest-sensitive sector. On top of that, we have longer run problems with the availability of housing. We have a built-up set of cities, and people are moving further and further out. So there hasn't been enough housing built, and these are not things that we have any tools to address. But where it comes into play very specifically in our work is inflation, which is a combination. It's really rental inflation. You're taking owner's equivalent rent and then actual rent paid by tenants, and you're running that through the CPI calculation or the PCE calculation, the one we look at. And what that's telling you is that market rents are increasing at a much lower rate or even being flat, and that will show up in inflation over time. It has to, as long as that remains the case. So.
And just real quick, what is your response to the letter that was sent to you by some members of Congress asking the Fed to lower interest rates to make housing more affordable?
My response is what I started with, which is that our job, the job Congress has given us, is price stability and maximum employment. Price stability is absolutely essential for people's lives, most importantly, mostly for people at the lower end of the income spectrum who are living at the edges, at the margins. And so for someone like that, high inflation in the necessities of life, right away you're in trouble. Whereas even middle class people have some scope to absorb higher costs. So we have to it's our job. It's what society has asked us to do, is to get inflation down. And the tools that we use to do it are interest rates. So that's how we think about that.
Courtney Brown from Axios. Can you give us some insight into whether the committee discussed the possibility of slowing balance sheet runoff in the months ahead?
Yes. So I would start by saying that balance sheet runoff so far has gone very well. And as the process has continued, we're getting to that time where questions are beginning to come into greater focus about the pace of runoff and all that. So at this meeting, we did have some discussion of the balance sheet, and we're planning to begin in-depth discussions of balance sheet issues at our next meeting in March. So those questions are all coming into scope now, and we're focusing on them. But we're at the beginning of that process, I would say.
Quick follow-up. Is it the case that the Fed would decide to lower rates and make adjustments to the balance sheet runoff in tandem?
Yes, we do. We see those as independent tools, and so they don't. For example, if you're normalizing policy, you might be reducing rates but continuing to run off the balance sheet. In both cases, that's normalization. But from a strict monetary policy standpoint, you could say we're loosening and one with tightening. So that could happen. It's not something we're planning or thinking about, but right now we're thinking about getting to a place where we're going to see the balance sheet runoff to continue. We're watching it carefully, and as I said, we'll be looking into that as a committee starting in March.
Thanks.
Simon Urbanovich with The Economist. Thank you, Chair Powell. You've mentioned 6 good months of inflation data, but that not being enough to build up confidence. Based on your previous response that your base case is you probably wouldn't start easing yet in March, the implication is that 8 good months might not be enough either. Roughly how many months do you think you might need of good inflation data to be confident?
Yeah, I'm not in a position to put a number on it. I'm just going to say it's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction, and we want to get that right. And we feel like the strong economy, strong labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public, because ultimately we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it. In terms of when that'll be, that'll all come out of our communications, and we won't keep that a secret.
Hi, Chair Powell. Evan Reiser with M&I Market News. Can you explain a little bit more on what you're considering when tapering QT? Do you need to see the overnight reverse repo facility all the way down to zero, or is it something that you can start with a couple $100 billion there?
Not a decision that we've made, but I wouldn't think we wouldn't be taking a position that it's got to go to zero. I mean, if it were to stabilize at a different level, but that's not a decision that we've made. That's what we'll be talking about at the March meeting. A whole range of issues will be briefed up, and the committee will get into all of the issues that will be arising over the course of the next, let's say, year or so.
Greg. Thanks, Greg Robb from MarketWatch. Chair Powell, I want to change gears a little bit. In the presidential primary campaign that's been going on for the last 9 months or so, your name has come up often, and many Republican candidates had said that they probably wouldn't want to give you a third term. So I wanted to give you a chance to talk about that. Do you want another term? You've had on the Fed. What's your stance on that?
I don't have a stance on that. It's not something I'm focused on. Focused on doing our jobs. This year is going to be a highly consequential year for the Fed and for monetary policy, and we're all of us very buckled down, focused on doing our jobs.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you mentioned, core PCE has been running at 1.9% over the past 6 months, and you guys are actually expecting core inflation higher this year at 2.4% compared to that 6-month measure. Given that forecast and that the median is for 3 rate cuts this year, what happens if inflation stays where it's been over the last 6 months for the next 6 months?
So we'll update our inflation forecasts at the next meeting. You referred to the December meeting. That's 3 months old, so it might be lower now given the data we've gotten. So look, as I mentioned, we're going to be reacting to the data. If we get very strong inflation data and it kicks back up, then we'll go slower or later or both. If we got really good inflation data soon, that would matter for both that would tell us that we could go sooner and perhaps go faster. So we're just going to be but of course we'll weigh that with all the other factors. We're setting policy based on the totality of the data.
But just to follow, if inflation stays where it is currently, that would probably mean that the real interest rate becomes more restrictive. Would that mean you'd have to trim more, perhaps, than you already have factored in?
Well, I think if we came to the view that that the 6-month inflation numbers, which are very close to 2, were in PCE world, if we thought that is really where we're going to be, then yes, our policy would be in a different place. It would. But that's the whole point, is we're trying to get comfortable and gain confidence that inflation is on a sustainable path down to 2% or toward 2%.
Daniel. Hi, Chair Powell. Daniel Davis, Agence France Presse. I just wondered if I could get your comment on the recent consumer confidence data. It seems to suggest that consumers are sort of moving towards a much more optimistic view of the economy. I just wonder, is it fair to say that they're moving towards where the Fed appears to have been in recent months? And do you think that inflation and falling inflation perhaps has played a role in that? And what challenges do you see going forward? Thank you.
Yeah, so it's been interesting that confidence surveys have been weak at a time when unemployment has been low, very low, historically low for a couple of years. But nonetheless, that's been the case. And we've asked ourselves why that is. And one obvious answer, we don't pretend to have perfect wisdom on this, but one obvious answer is that the price level is high. So prices went up much more than 2% per year for a couple of years, and people are going to the store and they're paying much more for the basics of life than they were 2 years ago, 3 years ago, and they're not happy about it. And it's fine that inflation's coming down, but the prices they're paying are still high. So that is what that has to be some part of why people are unhappy, and they're right to be unhappy. This is why we need to keep price stability. It's why we need to do our jobs, is so that people don't have to deal with things like this. In terms of you're right. In recent surveys, you've seen a couple of significant increases in consumer confidence or happiness with the economy. I guess that's a good thing. That can support spending, can support economic activity. There's some evidence of that. But you're right. It is a fact that we have seen a meaningful increase. I think levels of confidence are still maybe not as high as they've been at various times, but they certainly have come up.
Thank you for taking our questions. Brian Menace, CNN Business. Committee members have said they'd like to meet with business leaders and stakeholders in person to learn more about the economy in real time, given that some data are subject to large revisions, the issue of seasonal adjustments being thrown off balance, and many readings of the economy being quarterly. So did any members say they've learned anything not yet reflected in the data, or have you yourself learned anything through anecdotal evidence that hasn't been captured in the data yet?
Well, yes. I'm a big believer that yes. So we do meet with outside groups who come from all different parts of the economy, and I always feel like I spent most of my life in the private sector looking at individual management teams, and then building out from that. And so starting with GDP data and working into what's actually affecting people's lives is challenging. It's very hard. So I really like anecdotal data. In addition, as you know, the 12 reserve banks have really the best network of anyone. That in all their districts, they're talking to not just the business community, but the educational, medical, all nonprofit community. They have arms into all of that, and so when they come back, that's what goes into the beige book. But that they come back, and what each reserve bank president does is during the Outlook go around, they'll say in my district, and they'll talk about 100 conversations. They won't talk up. They will give you input based on 100 conversations that they've had with people of all different walks, and I personally find it very helpful in understanding what's going on, and also I think you hear things before they show up in the data sometimes.
Did any of them note a slowing economy based on what they've heard from their district?
Yes, I mean if you look back at the last, not this beige book, but the one before, there was a lot of slower activity. I think that what you're hearing now is things are picking up a bit. You're hearing not in every district, and not every person that we talk to, but you're overall, it feels like you're hearing things picking up at the margin. So that's what comes through.
Let's go to Jeff Cox for the last question.
Thank you, sir. Jeff Cox from CNBC.com. Just kind of looking to put it all together. You talked about basically the economy looking strong with 3.3% annualized growth in the fourth quarter. Does the strength of the economy speak more loudly to you now than any inflation threat might? That you're in a position, in other words, to keep rates elevated as long as the economy stays strong, and you're more tilted towards that. And also, perhaps, are you worried at all that the economy is maybe a little too strong right now, and that inflation could come back at some point?
I'm not so worried about that. It's again, we've had inflation come down without a slow economy and without important increases in unemployment, and there's no reason why we should want to get in the way of that process if it's going to continue. So I think declining inflation, continued declines in inflation, are really the main thing we're looking at. Of course, we want the labor market to remain strong too. We don't have a growth mandate. We've got a maximum employment mandate and a price stability mandate, and those are the two things we look at. Growth only matters to the extent it influences our achievement of those two mandates. Thank you very much.
All right. That was something else, my friends. Now, there was a key moment in here that I got pretty excited. It was after he was done speaking, and he started to field some questions. You should go back, because there was a very key moment where he basically said he loved where he was at. And basically, they're just going to have to wait for more data. 6 months data isn't enough. He wants at least a year of data. So it kind of really gives you an idea of where we're at. We're about 6 months in from what I'm understanding here. And we've probably got about 6 months to go. And so then later on, a question was asked. That question was, would you say that once you pivot and once you lower the rates that we could expect continuous rates to be lowered? And then Fed Chair Jerome Powell crashed the market right here. And, it was like really, that was it. It wasn't 3 hours ago. So let's see here. Let's go back down to the 15-minute candles here. My legs got tired. So we had this thing moving up. And it was a little about 40 minutes ago. There was one question that gave us this beautiful green candle, and things were looking good. That's when I said bullish. And we kind of got to the top of this channel, and then Fed Chair got another question. And all of a sudden, we came back down. Well, the question that I think gave us this little spike down specifically was likely that question that was asked to him about, in March, do you expect a Fed pivot and then continuous rate decreases from there? And he basically said no. He kind of said no, that he wouldn't expect, even if they lowered the rates in March, they wouldn't expect to be able to do it again in the following. And so it's going to be really interesting to see now exactly what happens given some of the language that we had. Now, there is still a high predictability right now that people are expecting that in March, in this next FOMC meeting, which I hope we can do live for you guys again. This was a lot of fun today, as boring as it might seem. Oh, there we go. See? All right. The odds have changed. Now, what's happening? The markets just pivoted, guys. The Fed just spooked the markets. Before we started this stream, here you go, guys. That's why you tuned in. This is the analysis I want to provide for you guys. So before we tuned in, the chances of the Fed lowering the rates in March were at like 55%. Now, after the hawkish, more hawkish than dovish, not extremely hawkish, but a hawkish or not as dovish as people would have liked comment, and specifically, I believe it was the question where they said, if you lower them in March, are you going to lower them again consecutively? He basically said no, and now what's happening? He kind of said basically that he didn't even maybe want to lower the rates in March, or that it's too early to say, and even if he lowers them in March, he's likely not going to be doing consecutive. He might have slipped there. Usually he rides the line a little bit more, but that statement was actually kind of shocking, if you guys caught it, where he came out. I want to see if I can find it, because it was actually a very important statement. Let me see here if I can find this for us. It's going to be tough.
To reduce rates. And for
territory.
And that tells us, I would say, it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, it's a good story. We have 6 months of good
bullish
on a path
to tail more weighting 6 weeks versus 3 months from now, that you have avoided those two risks.
Let's see if this is the question. I'm going to share with you guys in a second.
As you know,
expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged...
It's going to be hard to find. I'd have to go back in time, guys. But, those were some of the key statements. There was one that was pretty bullish, and then there was one that kind of spooked people. But let's see what Bitcoin wants to do now. So we have our volatility for the day. Just look at it, guys. So now we're down to the 15-minute candles. Let's zoom out a little bit. Let's go to some 4-hourly candles and see what we're looking at. So no doubt, some volatility. We started off the day, had a nice little move to the upside. Early from the lows, we came up all in all about 2.6%. And now from these highs here recently, this is that volatility you get. That's why Brandon's doing some trading right now. It came back down 1.6%. Nothing really in the grand scheme of things. I put out a little poll and I asked you guys, do you believe that we will see, or are you scared of a 50% crash? And let's just end that poll right now and see what the results say for you guys. Well, 72% of you guys say no. And that is exactly where I'm at. I do not believe that you should be scared of a 50% crash in Bitcoin or your altcoins, because this is something that we see time and time again with the Bitcoin halving. We typically see these markets slip. So, honestly, it started off pretty dovish. He felt very confident. His body language was very confident. And then he got asked a question about March specifically, and it actually spooked the markets quite a bit. And so you see Bitcoin slipping. Let's see what the S&P 500 is doing. The S&P 500 down quite a bit on the day, actually. I mean, the S&P 500 being down 1.27% on the day, that's pretty crazy. But again, guys, these are buy the dip opportunities. Brandon liked the live stream today. This was a very interesting live stream. That was a lot of fun to do it live and kind of break down some of the big things. There were two key moments in this meeting, in my opinion. One was the initial question he got where, things seemed really bullish, guys. And the more bearish question was the one where people asked about March. And he said that he doesn't see continuous rate cut after rate cut after rate cut. Likely, he kind of alluded that maybe he won't even cut the rates at all in March, which is contrary to what, markets were betting before this press conference. Previously, if you were here in the beginning of the stream, we looked at this. There was a much greater chance of a rate cut in March, and now the odds have gone down just today. That's why Bitcoin has the volatility that it has on days like this, guys. We were within expectations today, and odds are shifting in the favor to say maybe we're not going to get that rate cut in 2 months, almost, next month, but really almost 2 months away, about 50 days away. The next FOMC meeting is in 48 days, 22 hours, and we'll do this again, guys. So there you go. There you have it. Crypto's volatile. No, I don't think we go to $50,000 today. I don't think so at all. In fact, I wouldn't be surprised now that we had that meeting to see us dip below 40K in any way. I wouldn't be surprised to see any kind of volatility out of Bitcoin. Hopefully, if you guys are watching this, you guys enjoyed the stream and you enjoyed kind of listening to the man himself, right from the horse's mouth, get a little bit of my opinion on kind of what it is. In the end, it ended a little more hawkish than I think people would have liked, and we're seeing the market slip. The S&P 500 being down 1.7% today is pretty significant. Could we get a little recovery? Absolutely. I wouldn't be surprised at all. Could we see the probability of the next rate hike or rate pause or rate cut change? Yes, we could, because let's see what happens when the Fed minutes come out. Fed chair could have just gotten caught off guard with a question, answered it the wrong way. You have no idea how it is doing a live stream and getting an interview from questions in a chat or in a press room until you do it. It's not very easy. Sometimes you say something that maybe you wish you had thought through a little bit more. As you can see, he goes to his notes a lot, but he's supposed to ride the fence, and he kind of played to both sides, as he does. But one question was definitely quite spooky, which is why I think we're seeing the moves that we're seeing today. Guys, that's all I got for you in this one. More videos coming out for you later today, as always. But if you liked it, enjoyed it, smash the like button, guys. Subscribe to the channel. Turn on the notification bell for more content alerts of when we go live Monday through Fridays. I got more videos later today. That's all I got in this one, guys. As always, don't forget to DCA, HODL, folks. And, of course, I'll see you in the next one. 74% of you guys said that you are not scared of a 50% crash. Neither am I. That's why we DCA and HODL. Peace, y'all. See you next time.